Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, October 25th, a very quiet day in the markets with little change at the end of the day. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn and wheat managed to reverse a little bit of yesterday's loss. Corn up a penny and a half, wheat up the same amount, and Chicago beans were off 2 cents on front month November contracts after being in positive territory for much of the day. News today started positively with soybeans getting another round of sales to China, this time 516,000 metric tons. But overall, the market continues to struggle with very, very big supplies, and in particular, we've been talking about basis levels really coming under pressure at river terminals. We'll take a look at that here in a second. Other news out today, Egypt was in the market for more wheat. They had been tendering and got the results of those tenders overnight. They had 7 different offers coming in for their wheat business, and of those 7 offers, there was the lowest offer was at $182 a metric ton from Russia, but the good news was there was a U.S. tender that wasn't far off the mark at $185. So the final results of what they're going to buy is yet to be released, but so far it was at least encouraging to see a U.S. transaction put forward into the hat. Let's talk about the situation in soybeans along the river. We talked about this yesterday. We'll throw this chart back up here. Yesterday we had a big drop in soybean basis and corn basis, but really soybeans in particular taking the biggest brunt because barge rates have been shooting higher in the last few days. We saw barge rates really climb sharply on Friday as well as Monday, and as a result, basis levels have really gotten hammered. This is important for beans because we're getting close to first notice day on the front month November contract, first notice day being on October 31st, next Monday. So as we look at basis levels at the CME delivery points along the river, this is mostly along the Illinois River going into St. Louis, we see the basis levels at these facilities aggregated up to be around minus 35 cents a bushel. That compares to what we normally see in the last 5 years around first notice day, anywhere from minus 10 to plus 5. So we are substantially below normal in terms of where we should be as we reach convergence around that first notice day. So keep that in mind. That probably, in my opinion, will lead to some more pressure on soybean futures as we get closer to Monday's first notice day. Let's switch gears and talk about wheat. Like I said, there was at least some inclination that the U.S. market is reasonably competitive, but overall we continue to struggle with very large supplies. And when you look at our wheat business of late, it's really sort of taken a nosedive. We started out fairly good in September and October, but here in in the later part of October, we have seen wheat business really start to dry up. Last week's sales were very dismal. Export inspections were off the charts bad. So overall, I think there's still potential for more downside pressure here as we try to find the bottom. And if you look at sort of a longer term chart here on December wheat, the daily bar chart, what you can see is potentially the setting of a fifth leg down in what may be called a Fibonacci pattern here. The recent high here at 428 is sort of the short-term upside potential, but then right now, closing today right around the $4 mark, looking at 396 is sort of the short-term risk here to the downside. And if we can break 396, then I think we set the stage for taking out the low at 386 set back in August and potentially fulfilling this fifth wave down. So overall, there are very little things that we can point to in the wheat market that are positive, and I wouldn't be surprised to see us take another leg down with more corn harvest coming down the pipe, and overall the market just sort of in a bearish mood. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainedge.com and take a free demo of our trading platform.
As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at GrainEdge grainedge.com to become a client.